His name is Alan Olivier. The company's interim results were released earlier today. Headline earnings per share were up 25%. Cash generated 891 million. The dividend, despite the fact that 134 million new shares were issued, stayed at 17.5. And Alan, I suppose if you look at these numbers, they're skewed somewhat by the sale of a share in the Maputo coal terminal. Other than that, were they satisfactory?
I think, Lindsay, if you look at the trading earnings, yes, we've had a significant improvement or growth in earnings, not necessarily improvement because it's new businesses. In our ports and terminals business, earnings starting to come from rail, reasonable earnings out of our trading business, the bank's still performing. The business that we're not getting any earnings from, and in fact there's a small profit at trading level, but a loss at headline earning is out of the shipping.
Yeah, I mean, of course, everyone associates you with shipping, but of course, over the last few years, you've made a concerted effort to become more integrated. In fact, in your statement, I think you say you want to become an integrated freight and logistics service provider, which is what you are. And thank goodness that you diversified, because as you've said, shipping is in the doldrums. I mean, it just seems to have been like this for a while now, despite all sorts of talk about China and growth in world trade. How long has it been like this, and have you ever seen it as under pressure as this before?
Yeah, Lindsay, certainly we've seen poor shipping markets before. It has been a fairly extended period, but I think this one is very different to markets we've seen before in shipping. Although we're seeing a slowdown in terms of demand for commodity, from a seaborne freight point of view, seaborne cargo point of view, we're still seeing strong growth in some commodities. China's growth in seaborne iron ore imported was nearly 16% in the first half, whereas their total consumption of iron ore only grew by about 4%. And it's a substitution of commodity that we're seeing. They are substituting low value iron ore with better iron ore with cheap freight rates. They are able to do that. So from a shipping point of view, we are seeing continued demand for ships, demand for capacity. But the problem in shipping is that we've got this oversupply position where the Cape market, the Panamax market, even some of the smaller sizes have been saturated by supply. And that's what's weighing on the market.
I see it every day. If I go down to False Bay, there's a ship. It's an iron ore carrier, I think. Yeah. Its cargo is owned by the Chinese. The ship itself is registered, I think, in Panama. It's insured in London, and it's just floating around. It's almost been abandoned, and it's just sort of a system. It sort of enforces what we've just been talking about, the fact that shipping is under such pressure. Again, I saw this massive German container ship that was launched last week in 366 meters long, and then you've got the Vale iron ore carriers, these giant things. How long will it take this oversupply to wind its way into something a little bit more stable, i.e., supply and demand coming together?
Yeah, I mean, that's the million-dollar question, obviously. At the moment, we're still in an oversupply position. I think 2012 is the last year where we're going to possibly see a year-on-year growth in supply, although it might be a slight reduction over 2011. But going beyond that, we see the order book diminishing significantly. In some sectors, the order book drops away very, very substantially. And we're seeing little in the way of new ordering happening. And obviously there's good reason for that. You're not able to justify buying new ships even though the prices are falling. But also with the banking market as it is, with money become very tight, long-term debt almost non-existent in the market, it becomes very difficult to finance new ships. So that is going to shorten that time frame. The question is it 12 months? Is it 24 months? Is it somewhere in between? And certainly if we continue to see the increase in seaborne cargo moving, that'll happen sooner rather than later. But certainly we're in for a tough period for at least the next 12 months, if not a little longer.
But thank goodness you've got other elements in your portfolio. Freight, for example, earnings up to 580 million. That's a 278% increase. Revenue up 23%. Volume up 30%. You must be very gratified with that.
Yes, no, I think a lot of effort has gone into this. The team have really put an enormous amount of effort into the development of that infrastructure and aligning the logistics businesses with the infrastructure that we have. And it's slowly starting to pay benefit. Relationships with people like Transnet are extremely important in terms of making sure that once we've got terminals, once we've got facilities, we can get the throughput through them. And that's all starting to come together quite nicely. The first half of the year was not as good in terms of volume as we would have hoped for. It was a substantial improvement over the previous year, but there was a shortage of coal in the market. I think we're seeing that starting to turn a little bit at the moment. We've seen a couple of good months going into the second half. So there's some good signs there. And certainly in the development that we're looking at in terms of building that new port in Maputo, that new coal terminal, other infrastructural assets that we're looking at, we're seeing from the customer base a huge amount of demand, which we're working on in terms of developing those feasibilities for the projects.
That really has been a key strategic purchase for you, hasn't it, Maputo? Its volume was up 31%, I think. I mean, how much more can it contribute? You're obviously setting high hopes for this one.
I think we're just starting, Lindsay, in Maputo. Yes, we did sell a stake in the coal terminal to Vitol as a strategic partner to assist us with further development of that. But the Maputo port as a whole, which incorporates the coal terminal, the main port with the container facility, the motor cars, the chrome ore, even our sized coal facility there. We set out a port development plan a number of years ago, which we told the market about. And at that stage, we were doing 4 or 5 million tons of cargo through Maputo port. Year to date this year, we're at 9 million tons. I would hope that we'll do in excess of 14 million tons this year. But that big plan is to see Maputo over the next 15 years or so grow to a 50 million ton a year port. Now, how do we do that? The part of that plan is obviously to grow the coal terminal, and we're in the final stages of that feasibility study. What that'll see is a 20 million ton coal facility. The existing coal terminal, which is a 6 million ton capacity, will be converted then potentially to a magnetite terminal, which could handle 10 million tons. And then you should see growth in the container terminal, the motor vehicles we should see growing, the fruit, hopefully that growing as well. And then your minor mineral commodities, your chromes, ferrochromes, items like that, we would hope they would continue to grow as well. And
you sound very optimistic, and I hope you're right, and I hope world trade picks up, and I hope that the other pillar of your 4 divisions, i.e. shipping, does well. We didn't have a chance to speak about trading, but earnings there up 32% to 96.2 million, and also financial services doing well. Thanks so much for your time this lunchtime. That's Alan Olivier, who is the CEO of Grindrod, whose interims came out earlier today.